Question 3.2, Tembiso Limited. You are provided with the information for the financial year ended 28 February 2018. Required. Complete the following for the year ended 28 February 2018. So this financial year ends on the 28th of February 2018. 28 February 2018, which then suggests that it started on the 1st of March 2017. The financial year is a period of 12 months, so therefore the beginning and the end is very important when we are dealing with the income statement, because we want to make sure that expenses and incomes are recorded at the correct time. We are only dealing with the period starting from the 1st of March 2017 till 28 February 2018. Anything outside this period must then be taken out of this income statement, because it will then lead to us producing an incorrect net profit after tax. The main aim of drawing up the income statement is to determine whether the business has made profit or loss for the past 12 months. Right, so here we have the income statement for the year ended 28 February 2018. So let's start here. The focus in the information given on page 8 of your question paper, there we have the balances or totals on 28 February, and our main focus is under nominal account section, where it is starting with sales, and the sales amount has not been given, but cost of sales is given here. Cost of sales is 4,856,000. We are going to use this amount of cost of sales, 4,856,000. 4,856,000. This is cost of sales. Let's look for the transaction that is going to assist us to calculate sales. We need to know the markup percentage. Adjustments and additional information on page 9. Sales and goods. The company maintains a markup of 40% on cost. Note that all goods costing 96,000 included in the cost of sales were sold at 10% below the cost price. So we have old goods costing 96,000, which are included in this cost of sales, which were sold at 10% below the cost price. So it means before we calculate our selling price, we need to take out these goods. That's minus 96,000 here, equals to 4,856,000, 4,856,000, which is our cost of sales, minus these goods, which is 96,000, equal to 4,760,000. 4,760,000. 4,760,000. That's equal to 4,760,000, and the markup is 40%. Let's mark these goods up. That's multiplied by 140 over 100. Multiplied by 140 over 100. 4,760,000 multiplied by 140 divided by 100 equals to 6,664,000. 6,664,000. My space here, that's 6,664,000, and we still need to calculate now these goods separately that were sold at 10%. Note that old goods costing 96,000 included in the cost of sales were sold at 10% below cost price. This 96,000 were sold at 10% below cost price. So that is 96,000 multiplied by 90%. If it is 10% below cost price, it is multiplied by 90%. So 96,000 multiplied by 90% equals to 86,400. 86,400. 86,400. So it means our total sales is the combination of the 86,400 plus the 6,664,000. 6,750,400. 6,750,400. This is our this is our selling price. Just to repeat this calculation, our total cost of sales is 4,856,000, and we were told that in this cost of sales there is a 96,000. There is goods costing 96,000 which were sold at 10% below the cost price. So therefore this good had to be taken out, and we are left with 4,760,000, and we mark it up by 40%, which is our markup percentage. Then it gives us 6,664,000. And then calculating this 96,000 at 10% below cost will then be 96,000 multiplied by 90%, which is giving 86,400. So the total sales will be 86,400 plus 6,664,000, which is giving 6,750,400. 6,664,000 plus 86,400. Just to verify, 86,400 equal to 6,750,400, and then minus cost of sales. Sales minus cost of sales, 6,750,400 minus cost of sales of 4,856,000. 4,856,000 equals to 1,894,400. 1,894,400. 1,894,400. So 6,750,400 minus 4,856,000 equals to 1,894,400, which is our gross profit. And if our gross profit is 1,894,400, if you add the operating incomes given here, add the operating income given, so 1,894,400 plus the operating income of 879,440, 879,440 equals to 2,773,840. 2,773,840. 2,773,840, which is our gross income. And then operating expenses, we need to subtract the total operating expenses. But for now, we don't have the total operating expenses. Let us now deal with our expenses. In your answer sheet, because this is what was given in the answer sheet, in your answer sheet, your salaries and wages of 501,200 was given. And then let's look at the following one. Operating expenses. Salaries and wages have been recorded. The following expense here is audit fees. And the amount for audit fees here is 65,400. That is given. And then there is also an adjustment for audit fees. The adjustment for audit fees, it says 75% of the annual fees have been paid. 75%. So this 65,400 is only 75%. Tina, we need 100%. So 65,400, we need 100%. So it's going to be 65,400 multiplied by 100 divided by the percentage. We are told that this is only 75%. So 65,400 multiplied by 100 divided by 75 equals to, the total amount is supposed to be 87,200. So the correct amount is supposed to be 87,200 for audit fees if it is 100%. So 87,200 minus the 65,400 that has been paid, so only 21,800 still needs to be paid. So we still need to add 21,800 here, so that it will then give us 87,200, which is 100%. Because if only 75% was paid, we need to pay 100% audit fees. Right, the following expense after audit fees, it is rent expense. Rent expense. Rent expense. And the amount given here for rent expense is 79,240. 79,240. This is for rent expense. And on page 9, we have an adjustment for rent expense. An adjustment on page 9, which is adjustment D. It says a storeroom was rented from the 1st of June 2017 at 11,200 per month. And rent increased by 7.5% on 1 December 2017. Provide for the outstanding rent. So if it was rented on the 1st of June 2017, June, so it's going to be June, July, August, September, October, November, 6 months. So for 6 months, rent, for 6 months it was 11,200. 11,200 times 6. So for 6 months, rent was 11,200 from June to November. 11,200 multiplied by 6 equals to 67,200. And then from December, it was increased by 7.5%. So that will be December, January, and February. Our year ends in February. So it was increased by 7.5%. So it's 11,200 was now increased. That's multiplied by 107.5 over 100. So let's check, it was increased to how much? 11,200 multiplied by 107.5 over 100. Then it was increased to 12,040. And this was with effect from December, January, and February. 3 months multiplied by 3. 12,040 multiplied by 3 equals to 36,120. 36,120. And if we add the two rents, 36,120 plus 67,200 equals to 103,320. So the total rent is supposed to be 103,320. For 6 months, the rent was 11,200, and for 2 months, for 3 months, rent had increased to 12,040, and then 3 months amounted to 36,120. So the total rent for 9 months is 67,200 plus 36,120. Remember that we did not rent this building from the beginning of the accounting period, which is the 1st of March. We only started renting it on the 1st of June, so it's only 9 months. And the total amount is supposed to be 103,320. So how much is missing here? 103,320 minus 79,240. 79,200, it's 24,080. We need to add 24,080 here. 24,080. So we are done with rent. The following expense here is director's fees. Director's fees. right? And the amount given for the director's fees is 497,800. 497,800. Director's fees is 497,800, right? 497,800. And then if you look at the adjustment for director's fees, it says here the company has 3 directors who earn the same fee. One director was paid 2 months in advance. One director was paid 2 months, so we have got 3 directors who earn the same monthly fee. So it means each director will be paid 12 payments in a year. So it's going to be 12 payments for the first director, another 12 for the second director, and another 12, which is a total of 36 payments. But because the third one was paid 2 months in advance, it means the third one was paid for 14 months. So the first one is 12, the second one is 12, and the third one is 14. So 12, 24 plus 14, that will give us 38. So the payments, so this 497,800 is for 38 payments. So let's then say 497,800 divided by 38 payments. We want to find a payment for each month for the director. So it's 497,800 divided by 38. So the director's fee for each director per month is 13,100. And this one who was paid 2 months in advance, if we know the monthly amount, which is 13,100 multiplied by 2 equals to 26,200. Multiplied by 2 equals to 26,200. So we need to subtract 26,200 here for that payment for the 2 months. Prepaid expense. This 26,200 is prepaid expense. So 497,800 minus the 26,200. 497,800 minus 26,200 equals to 471,600. 400. So the correct amount for the director's fees will be 471,600 because we have taken, because the 3 of them must be paid exactly the same amount. So because we are dealing with the accounting period from the 1st of March to 28th February, which is 12 months. So all 3 directors must have been paid for 12 months. So this other director who's been paid for 2 months, that 2 months must then be taken out as it is regarded as prepaid expense and is not part of this accounting period. Therefore, it must be subtracted. Then the correct director's fees will be 471,600. The following expense is sundry expenses. The following expense, which is the last one, is sundry expenses. And then the amount given for sundry expenses is 91,680, and there is no adjustment for this amount. So sundry expenses is 91,680. 91,680. We just write the amount as it is given because there is no adjustment for this amount. So now this brings us to the end of our operating expenses. Then we need to come up with the total now for operating expenses. We need to come up with the total for operating expenses. Total for operating expenses, we have 501,200 plus 87,200 plus 103,320 plus 471,600 plus 91,680. 1,255,000. Our total operating expenses is 1,255,000. 1,255,000. This is our total operating expenses, 1,255,000. So let's verify this. 501,200 plus 87,200 plus 103,320 plus 471,600 plus 91,680. So this is 1,255,000. And then gross income now. Gross income minus operating expenses will give us the amount which is called operating profit. So gross income, which is 2,773,840, 2,773,840 minus 1,255,000, 1,255,000 equals to 1,518,840. Our gross profit is 1,518,840. Operating profit is 1,518,000. That's 2,773,840, 2,773,840 minus 1,255,000. This is giving us 1,518,840, which is our operating profit. Now we want to record interest income. Our interest income is not given here. The interest on fixed deposit was not given. Let's check on the transaction there. There is no transaction that talks about the interest on fixed deposit. So let's skip this. The net profit before tax. The transaction, we are only given the net profit after tax. And then the interest expense, yes, it is given. That is transaction E. Capitalized interest amounted to 242,500 for the year ended 28 February 2018. It's 242,500. Our interest expense is 242,500, which must be in brackets, 242,500. So let's now start from the bottom and go up, because some of the amounts are missing here. If we had the interest income, we would have been recorded the interest income and then we go down. But because of these amounts that are missing, let us start from here and go up. Then we'll be able to solve for the missing amounts. We are told that the correct net profit after tax is 959,400, right? And then income tax for 2018 is not given, but we are told that 31,300 is still due to SARS. How much was paid to SARS? That will give us an indication how much is our income tax for the year. We have already paid 341,800 to SARS. 341,800 to SARS, right? And then, but SARS is sending us a statement which says we are still owing 31,300. So 341,800 plus this 31,300 that we are still owing. It then tells us that it means the interest for the whole year is, the income tax for the whole year is 373,100. So that's 373,100. How did we calculate it? We took the provisional tax of 300 and provisional tax payment of 341,800 plus this amount. This 348,800 has already been paid to SARS, but still SARS says that we are owing them 31,300 amount due to SARS. Yes, 31,300. So then tells us that the total amount 341,800 plus 31,300, then the total amount is 373,100 for income tax. And income tax in the income statement is recorded in brackets. And now that we are reversing, it will be 959,000 400 plus 373,100 because we are reversing, and then this will give us 1,332,500. 1,332,500, which is net profit before tax. And still, because we are reversing, we will then add the 242,500, and then the amount will be 1,575,000. 1,575,000. Still reversing, because this one is positive, then it's going to be a negative. We are going to subtract 1,575,000 minus 1,518,840 equals to 56,160. So this interest income is 56,160. So we have been able to solve for the interest income amount, and the interest income amount is 56,160, and it is a balancing figure. And therefore this is bringing us to the end of the income statement. Income statement, there's a statement of comprehensive income. Sales minus cost of sales will give you the gross profit. If you add other operating income, you will get the gross income. If you subtract all the operating expenses, which is a total of 1,255,000, you will then get the operating profit plus your interest income to get the net profit before interest expense, minus your interest expense to get the net profit before tax, minus your income tax to get to the final answer, which is called the net profit after tax of 959,400. But if you see that there is an amount that has been omitted, or there is an amount that is not given, you need to skip that amount. You go down to the final answer and you work backwards. You will be able to solve for the missing amount. Thank you.